Good morning, everyone. Good morning, good morning. How's everybody this morning? Hey, Nate. Lonigan, how are you? Happy Friday. I'm good, I'm good. Hey, Rejon, how you doing? Trademaker. Hey, good to have you back. Wow, it's been a long time. Too long. Good to see you. Okay, folks, let's go see what's shaking tonight. This morning, bit of a slow one here. Um, Overnight inventory is a bit mixed. Okay, we have, I'd say it's more short than anything else because most of the trading is underneath yesterday's close. Okay, and right away, when you look at this market profile from yesterday, you can clearly see we have two distributions. Okay, we have a distribution here and a distribution here. They're separated by single prints. That is a short position. So eventually, when we get down there will be bids. Okay? So that's why they're front running it here. That's why the overnight low is where it is. Because they're front running that particular short position here. Right? Let's take a look. It's pretty interesting. We had a move up at the end of the day. Those move, when the market liquidates, it goes up and then it liquidates and then it does this at the end of the day. You get a lot of people trapped short right here. Just the nature of the beast. And that's generally where you'll see the overnight low, is where people get trapped short in what the old market profile traders call this the afternoon pullback low. The market goes up, it pulls back, and that sucks in a lot that sucks in a lot of people because they're looking for this. But then the supply shuts off, the market rotates back up and it traps a lot of people short there. That's why your overnight low is right there, because they will front run this level. Right? This is you know, it's pretty much the same thing over and over and over again. So now let's see if we can break this 50, what is that, 59.30? Let's see if we can break that level going into when London opens. Yeah, 29.5. Right, let's go take a look. Now, a lot of people are wondering, do I go long? Do I go short? Is it going to go up? Is it going to go down? The nice thing is, it doesn't matter. If we know that there is buying here at that L low, you see, this is when the market liquidated in J period and L period, and then ripped up and closed up here at 34. the people who are short down here, their bid to cover at our overnight low, which is 23. So that allows wholesalers to just go back and forth, and we're just in a sideways market right now. So wholesalers are both sides of this 30 to 36 area. Okay? So we'll use that as our balance. And I posted in the room how I got the balance zone. I'm looking at these lows, this high, right? When you look above that high, you come back to that low. When you look below that low, you go right back to that high. So you can see that two-sided trade. Then you double it to the upside and downside so you can get some targets. And then you just sit and wait for your trade. Just sit and wait for your trade. So the trades that I like are the look below and fail. Right now we've got a seller at 32, so there's no look below and fail right now. We just find out where VWAP is real quick. Yeah, it's right there. It's right at 31 and 3/4, 32. So for example, if you're a short seller and you're thinking short, you'll be wanting to sell the 31s and you'd put your stop above 31 right here. That's where your sellers are engaging. So you can stay short as long as 32 doesn't get reclaimed. You need the market to take out these two lows here. And then your target would be 28 and a half. The ranges are small tonight, so you're not going to be looking at, huge wins. Also, once again, they raised margin. And when they raise margin, it's a bit of a pain because what it does is it takes a lot of participants out of the market. And that's a pain, you know? You get less follow through. See how it just stalls, right? So you don't get that smooth movement. This was a nice look above and fail of 35. I was on a conference call, so I wasn't able to take that, but that's okay. The main thing to remember is when you start trading in the morning, take some time, relax, let the market sort itself out. You know, you don't have to get all wound up. You know, you really want the slower the market, the slower you should engage, right? If you put it into, terms people from the 80s can understand, you know, you walk into a club and it's a slow night in the club. There's not many people dancing. So, you might want to come back a little later. If you are positioned short, you basically put your bids down at 29. Hi, Laura. What do I charge for mentorship? It's a lifetime mentorship program. So it's a little expensive, but there's no limit. So it's unlimited one-on-ones. that sort of thing, and it's 29.99 US. Yes, when you have a margin increase trade maker, you don't have to pay more per trade. You have to have a larger buffer in your account. So usually, what do they charge you? $40 to $50 margin to hold a micro. When it's increased, it's usually 500, right? 400 to 500. Yeah, so the difference in my mentorship is that there's no limit and there's no end date because people take different amounts of time to become successful at this. And if you're going to take money from them, it's they've got to be successful and you have to work with them for as long as it takes. Whereas most people, they charge you one fee for a course or something like that, and then they walk away from you. Um, you don't get that with me. I basically haunt you until you're profitable. And if we have to work together every day, we work together every day. It's uh, it's been good. It's been good. Retail traders need time. They need time to understand concepts. They need time to learn how to execute. They need time to learn how to read markets. They need time to learn how to adapt and change and learn a business. Because basically, as a retail trader, you're a small business person. This is a slow drip down. My goodness. If you are a short seller, this is important that the top of these candles are moving lower. So you can see that sellers are competing. Now, once this red line, the offer starts getting above these white levels, that will tell you that the sellers see buyers and they're increasing price. So when sellers see buyers, they raise price. Why do they do that? Because that's how commerce works. But if these sellers see that these buyers are walking away, they are going to go down here to fill them. If they see buyers are lining up, they will raise price like they're doing now to see if the buyer will buy at the higher price. If the buyer doesn't take the offer, the seller will lower price. It's really just that simple. Sorry, I clicked the wrong thing. God grief. This Epic pen is driving me nuts. See, look at that. You could clearly see these offers. Look at these candles. 1, 2, 3, 4. 4 minutes where the sellers are parked there. See? There's competition at that level. See? It's really simple, right? When sellers compete, price will go down. And if you're short, that's what you need, right? So if you were short at 31, 31 half, right? This is what you're looking for. And you're going to put some covering bids before this level because this is the middle of the zone. So if you're short at 31 half, put in a 29 bid, put in a 29 half bid, put a 28 and 3/4 bid in because you're going to have some competition buying right here. See, that's how we came down to 28 and 3/4. The offer moved up. When the offer moves up, that means the sellers have seen buyers. What do you mean sellers are lifting price? Okay, Sniper Kid, you have 100 pieces of, I don't know, let's say you're selling oranges, right? and TradeMaker comes and starts selling them, you're selling them at a buck. TradeMaker comes and starts selling oranges at 90 cents. Okay? So now you got to match her offer or undercut her, right? So you go 89 cents. She goes 85. Now somebody buys her inventory and she's out of oranges, so she's gone now. You're the only offer, right? At, let's say, 89 cents. Now you see a whole bunch of buyers coming in. What do? You raise your price. Lifting means up. So you just sell your position at a higher price. It's not like you have three contracts. Let's say you have hundreds of oranges. Does that make sense? When sellers are lifting price, it means that they see buyers and they're raising price to take advantage of the influx of new buyers. And that's why it's called making a market. You set the price according to the amount of buyers that are coming in. Just like Walmart, right? You got to move your inventory. You got to turn your inventory into cash. But if you're lucky enough that a bunch of buyers come in, you get to raise price and charge more. Right now, they're lowering price because other sellers are competing. Yes. Yeah. Larger market participants control the supply. Do you know in any business, Sniper, there's a wholesale element? There's a wholesale and a retail. The same applies in markets. It's just nobody ever talks about this stuff. They talk about market makers like they know what they're talking about, but they always have the wrong information. They always spout wrong information about what market makers do. But they have no idea that there is a wholesale element to the market. There are traders who provide liquidity, right? There are firms that provide liquidity. Citadel, Jane Street, Bank of America, right? And then there are large traders who act as liquidity providers. Exactly. It's basically like trading a chart of Walmart sales. Now you're cooking with gas. All this is a sales chart. The charts that you see in front of you are nothing but sales charts. They tell you where the inventory is being acquired and where it's being distributed, whether we've got lots of buyers or whether we're putting it on sale. This way you can make intelligent business decisions based on the actual business that's taking place, not some phantom, you know, trading indicator or yeah, it's a market, right? What's the purpose of a market? A purpose of a market is to distribute goods, right? Here we're distributing ES contracts. NQ is NQ contracts. Apple is Apple stock. Distribution is the lifeblood, right? You create markets, people come in so you can sell them a lot of stuff at the highest possible prices you can for as long as you can until they get sick of buying it, then you got to put it on sale. There's 28 and a half, finally. Size traders don't trade at all like we do. It's a completely different business. No, they don't press the buy and sell button. They do what they call working an order. There we go. And if we stay under 28 and a half, you'll be looking for 25 quarter, which is just right here where that stop in B period is. This is good because it's allowing those who got caught short last night to come in and do some covering. Very healthy. Markets need to liquidate. It's healthy for markets to liquidate. You need selling in a market. That's the purpose of a market. Markets that don't sell become very hard and sticky and illiquid. Okay. Oh, this is like watching maple syrup drip down a tree. Those of you who are still short, I applaud you on your patience. Most of those market makers always have inventory. If they don't have inventory, they'll short it to you. That's why short selling is an important feature of a market. So if you call up a market maker, right? In the old days, if you called up a market maker and you asked him to buy 10,000 shares of a stock that's trading at like $5 or $6, if they don't have it in their inventory, they'll short it to you because you're a good client, and then they'll try and buy it back cheaper. If they can't buy it back cheaper, then they take a loss on that transaction. But because they do millions of transactions a day, overall they're making money. That's why the term that you guys don't understand is short to retail. So when a market maker doesn't have the inventory, like so say if I come with you to a big order, right? And I say, "Hey, Sniper, listen, I need to buy 500,000 shares of this stock at $6." You'll go, "Oh, geez, I don't have any. Can I work it?" Right? Like I'd have nothing. So listen, I'll make you good on 20,000 at 5. I'll short 20,000 at 5 to you. Let me work the balance, right? Let me work it. So that market maker will go in the market and try and buy you your stock at the cheapest possible price, right? And then like half an hour later, right? Yeah, exactly. They only will sell it short if they have an order to fill. They're not going to short it just for the hell of it. They have too many transactions, right? And that's why if there were no market makers and you went to buy 10,000 shares of a $5 stock, you'd get 100 at 5, 100 at 510, 100 at 550. You'd have to buy it basically where it's offered. There would be nobody that would be willing to short you that so you get what you want at the price you want. See, London's going to open in 5 minutes. Let's see what shakes out. Hmm. It's a good morning to go to the gym. Trade maker, the overnight cost basis is above you. Yesterday's cost basis is right here. No problem. We're right at yesterday's cost basis. Really, right now, trade maker, there's no trade for you. If you're looking for a look below and fail, I would suggest wait for 59.25 and a quarter. That way you would have cleared out all of these people here. Because if you did a long here at 28, right? If you did a long at 28, you are going to have sellers here to compete with, and sellers here to compete with, and sellers here to compete with. So at each of these levels, you are going to have to compete with other sellers. So would you really want to take that trade if you have limited upside? That's why when you wait till the end of at the edges, right? You flush all of these people out. The shorts will come in and tell you they'll take all the inventory under 25. Wholesale will start building a position over 25. That's when you get in, and 25 to 28 is your trade. Is it a good idea to trade the edges of value area high and low? Uh, I don't do that anymore. I stopped doing that after 2017 because the ranges, now you can have a value area that's 50 points wide. That's why I use the 1 minute chart, Sniper Kid. It's just so much easier. Market profile is great. And there's about 4 key points to market profile. Poor high, poor low, where the cost basis is, right? Single prints, and where the stops are. Other than that, you really can't take market profile and make it effective. There are not a lot of consistently profitable market profile traders, especially when the ranges are 50, 60, 80, 100, 200 points wide. Market profile becomes just useful for certain things. That's why I use the 1 minute candle chart to actually execute trades from, because it's much clearer and it's much more focused. Does that make sense? I'm not knocking market profile. It's just when times change, you have to adapt with them. So if you're trading market profile and you're shorting value area high, where's your stop? I like my stops to make sense. They have to be structural. They have to be based on the business of the trade. So if the trade makes sense, there's an area where the trade won't make sense, and that's where my stop is. Right? So for example, if I was going long here at 28 and a half, 29, the most I would spend on a stop is here, because if the market breaks this level, people will need to sell underneath that level, and there's no reason me being long here. The business reason for going long, see, it's being invalidated right now. Short sellers will come in, right? Short sellers are the first to buy, then wholesale longs, then us. And that last set of buyers are the people who shorted here. So this is smart money shorts covering. The dumb money shorts are the last people to buy, and they create these big green candles. It's the people who short at the bottom of the cost basis, short in the hole. Right? There's a sequence, right? When a market liquidates, there's a sequence. I've done videos on it. It's in the video section, Sniper Kid. Give it a watch. What would be a good area for the shorts to cover? An area where there are offers. So short sellers, smart short sellers, cover where they can, not where they want to. Dumb short sellers try and cover where they want to and have the trades go against them. Right? If you're short something at 5 and it goes to 4 and it goes under 4 and comes back up, what does that tell you, Sniper Kid? You're short at 5, it looks below 4 and fails and comes back up over 4, and you want to cover at 3. Is that realistic? Think about it. It's London Open. I don't think London even knows it's open, Mr. Mother Truck. It's a very sleepy London Open. It's sleepy. All right, let's see if we can take out those 59.30 sellers. Right? They're right here. They're waiting. They're waiting for us. It's a slow night in Walmart, folks. Oh my goodness. Slow night in Walmart or 7-Eleven. Here we go. Creeping up on 30. Now we're looking for a reaction. We're expecting sellers to be there. Now, if those sellers see buyers, they'll move their offers up to 30 half, 31. There we go. See? Nope, no takers at 30 quarter. Oh, there's a taker. Half? Anybody want it? Come on. Oh, somebody bought it at half. It's usually a little better than this, Rosemark. It's just a crappy night. It's the end of the week. Right? The goal of every retail trader is to do well Monday to Thursday and take Friday off. Listen, if I didn't have you guys to talk today, I would not be in front of the screens. I'd be outside in the sun. It's Friday. Yeah, if you fail to break a low, what's going to happen, Sniper Kid? There's nothing for sale under that level. So the buyers go up, right? The buyers have to pay more, right? COVID, you can't buy toilet paper for 10 cents a roll. Now you got to pay $1. Know what I mean? Exactly. Right back to VWAP. So that tells us that the people who were buying here earlier in the evening have moved their buy orders up here. It's good information. Remember I was saying if you were short at 31, you should be covering down here, and if it starts lifting up, get out of the trade. Pay yourself. This is why. This big green candle, right? So let's pretend this level is this level, okay, Sniper Kid? So we came down here, the shorts bought, wholesale bought, we bought, and then all of a sudden the shorts who shorted down here went, oh crap, we got to cover. And that pushed price right up to 32. It's the same thing over and over and over again. It never changes, right? It gets faster, it gets more efficient. Yeah, of course, Rose, markets have been slower. We've got a massive short squeeze going, right? Take a look at the long-term chart, right? Yeah, it's bid to cover, exactly, right? You got a huge gap. You got single prints. You got shorts trapped all the way up. The more, the higher you go on short covering, the crappier the price action gets. That's why I want some liquidation, right? I want some liquidation. It greases the wheels, right? The more and more a market gets short, the crappier the price action is. It's just the way it goes, right? Until we run out of buyers and they hammer it down, right, to get rid of their inventory, and then we'll get some better trading. What's our news today? Is it NFP? Longer term participants are not going to buy a short squeeze. They didn't just fall off the turnip truck. Anybody who looked at that chart I just showed you and saw that big gap would not be coming in for size here, right? That's not how business works, right? If you saw this, would you come in and load the boat long here? Sniper Kid, I want you to use some common sense now, right? Think about the markets using a little bit of common sense, right? If you looked at this chart, would you come in here and load the boat long? No answer. Okay. Well, I'll let you think about it. Let's put it to you this way. If you went to look at a house and you saw the house was built on stilts and the wood was rotting, would you buy the house? I know it's hard for you guys to visualize. Right? His question was, are longer term participants going to step in? No, they're not. Right? They're not going to step in. They're going to wait for a liquidation. He's gone now. But yeah, if somebody wants to buy 1 million shares, 20,000 contracts, they don't want to pay the high for it. Right? You got to understand, Sniper Kid, if you're still around, I don't know if you're still listening, but large money traders, large institutions, what we call smart money, there's a reason why it's called smart money. They don't typically chase price because they get paid not to trade. They get paid to make intelligent business decisions. Let's hope. Right? Ugh. If we can get back over 32 and a half, 33, targets 35. There's 32 and 3/4. Look below and fail. Real quick of 31 and 3/4. Let's see if we can get to the middle of the blue zone. And really, the only reason why the market keeps going up and up is because of the way it's structured. And the business model of US capital markets changed drastically 25, 30 years ago. How can I know prematurely that look above and fail will hit my stop? So you want to get out of the trade before it hits your stop? Watch the offer. The offer is the red line, the bid is the green line. If you're shorting, say you're short here, and the market can't get underneath this level, right? It looked underneath it and came back up. Well, that's a clue. That's clue number one. The next candle opens and takes out the top of the previous candle. That's clue number two. Right? The offer starts lifting. You don't want to short an offer that's moving up. You always want to short when the offer is moving lower, like we did here. And all it is, Slippy, is you just got to sit and watch. Spend some time watching when you're not in a trade. I encourage all people to do that. All the really big traders will sit and watch markets for huge amounts of time. It's the dumb money that just blindly executes. Smart money sits and waits for its opportunity when things are stacked in their favor. Slowly creeping higher here. Oh gosh. Feels like they turned off the car, threw the keys in the bushes, and went in the house. Oh, caught a bid. Here we go. Slowly creeping up. Your target's 35. They'll probably front run that. So Slippy, you see how the offer is consistently moving higher, right? The top of every candle is consistently higher, right? That means that the sellers are raising price to take advantage of the buyers that have come in, right? They took the price from 59.35 all the way to 59.28. That did a couple of things. It shook out some of the trapped longs over 32, and then what it did was that little sale brought in customers. So now they can raise price again. And there you have it. And that's commerce, ladies and gentlemen. And this is just a sales chart. Let's see if we can get a 34.5 print. Yep, when I say watch the offer, I'm referring to the 1 minute candle. You don't have to watch the bid, just the red line, the offer. If that's moving up, it means sellers are increasing price. Why are they increasing price? Because they see buyers. There's a 34.5 print. Oh, let's see, 3/4. Come on. Whoa, 3/4 print. See, you saw it right there. Just as we were talking about it, you saw it. If you rewind this video recording, you'll see it. Now the offer's down to 34.25. See, the bid drops, the offer stays. Now the offer will follow that bid to nab those buyers. So remember how I said they were going to front run 35? There it is. Right? We couldn't print 35. They stepped in and sold. All of this you can actually understand if you just spend some time watching. Focus. Now, if you're always looking for a trade, like a dog looking for a bone, and digging around in the dirt, you're never going to notice this stuff. Right? Look at the space between the top of that candle and that level. That's front running. Then the offer moved down. The next candle opens in 7 seconds. Let's see if that offer keeps moving down. This is called backfilling. This is the back end of the move. That's what you want to short. Short, stop, target 1, target 2. And this is rotation. This is the rotation of inventory. And if you see the offer start moving up, right? If you are short and you see an offer moving higher, right? If it's there and it moves up here, and then if it starts doing this, like it was here on the front side of the move, then what do? You know, like those old haunted movies when people go, oh, this is a really nice house. We got a good deal in it. And the first night they're sleeping and they hear, get out, right? When the offer starts moving higher and you're short, that's the market trying to talk to you like that. See, look, there you go. Right? Just as soon as I say these things, it starts happening. Right? So the market went down here, found some buyers, and raised price. Now let's see if those sellers are still there. They were here before. They're here now. Look. Can we get a print at 34.5? There. So Slippy, did you see that? How you're watching the offer, it moved down and then moved back up? so you know how to get out of your trade. It's pretty simple. All it takes is a 1 minute candle chart, a couple of straight lines, and the ability to pay attention. It's really all it is, right? Can you focus your attention? Because your execution, if you can focus your attention instead of just blindly trading like a chicken with its head cut off, if you can focus, your execution will get better and you'll actually start making money. And you'll actually start managing risk much better. You'll start making intelligent decisions. Exactly. Most trading educators don't even explain what a bid and an ask is, or a bid and an offer. They don't explain the importance of it. See, my whole life for 30 years, I was the offer. That's why I know. Right? If I see sellers, I'm moving up. If I don't see sellers, I'm moving down. If you're starting to compete with me, I'll undercut your prices to grab the buyer. I have to convert my inventory into cash because it is a market. Don't ever forget it's a market. Okay, folks. Any other questions? Yeah, and this is what I teach every day at the Trading Syndicate. Little plug for the room. Come join us. You know, if you don't want to trade your own money, we'll hook you up with the funding firms that work with my partner Steve. And learn how to trade using somebody else's money. Learn how to trade using discipline. Learn how to trade using good business habits. And I promise you, everything that we teach you is practical. Right? There is no mumbo jumbo. There's no double talk. We don't talk about things we don't know anything about. You won't hear me talking about gamma and divergence between swans and ducks and all sorts of nonsense. Right? Where do you put your trade? Where do you put your risk? And how do you get out of your trade if it goes wrong? How do you know that your targets are actually realistic or whether they're pie in the sky? Right? There's no nonsense in our trading room. Right? You don't have people talking about all sorts of crazy indicators and, correlation divergence of squirrels versus gophers. All that nonsense that just confuses people. Right? Where do I put my buy? What's the business reason for the trade? Where do I put my stop? That's the insurance for the trade. That's when the business reason no longer makes sense. So I don't lose all my money, right? Then where's my target? Now, is that target, do we have a snowball's chance in hell of getting to that target, right? Or is that a pie in the sky target? Or do I have a realistic target where I can actually take my buy order and turn that into some cash, right? It has to be practical and repeatable so you can build it into an execution model that becomes like second nature. So it becomes like breathing. So you can get out of bad trades like flicking a piece of lint off your shirt, right? So you don't have a big nervous breakdown and need a psychologist when the trade goes bad, right? This way we get rid of all that stupidity like FOMO and tilt and chasing and revenge trading. Right? If you walked into your dentist's office and you had a toothache and your dentist is in there smoking a cigarette looking really angry and he looks at you and goes, "Hey, My last patient really pissed me off, so I'm going to do some revenge dentistry on you. Right? Think about it, right? Let's do some revenge baking, revenge dentistry, revenge heart surgery. I'm just going to pull your teeth out because I got nothing better to do. FOMO. Guys, get rid of those words. They'll help. It's all just ridiculous nonsense that allows people to have bad habits and no discipline. Right? That's all just nonsense. You'll never find that in a regular place of business. And we're back over 35. We'll be targeting the overnight high up at 40. The president's got another press conference? Man, this dude doesn't stop. Alrighty. Well, it's time for me to get a coffee then. Thank you everyone for being with us. Come visit us at thetradingsyndicate.org. If anyone is interested in private mentoring, reach out to me on X, or you can email me at vwaptrader1 at gmail.com. If you have any questions, I'm always around. If you want to discuss your trading and you think mentoring will be for you, I'll do a call with you. I don't mind. We can discuss your trading needs. Thank you, everyone. Have a wonderful morning. We will see you at 9 a.m. Eastern Time, half hour before the open. Enjoy your trading day, everyone. Thank you. Bye for now.